Hey everyone, me Kevin here. In this video, I'm going to give you a quick summary of all of Joe Biden's tax positions, how they're going to affect you and your wallet compared to how Donald Trump might, and I'm going to use research from the Tax Foundation, which is a nonpartisan tax organization that just researches tax policy to give us bottom lines. And I'm gonna make that even simpler for you. Let's get right into how our taxes might be affected under a Joe Biden presidency, and then we'll talk Trump. Oh, and of course, quick reminder, this video is sponsored by life insurance that you can get in as little as 5 minutes via the link down below. Apple Pay or Android Pay for it. And of course, get 2 free stocks with Webull. Deposit $100, get 2 free stocks worth up to $1,600. First, let's get started by talking about how things will change for people making more than $400,000. This is actually very important to talk about for everyone though, because if something only affects somebody making more than 400K, well then you know that you would not be affected if you make less than 400K. So for example, income taxes. Joe Biden has solidified his plan and given us new updates. And if you make under $400,000, your marginal income tax bracket will not go up. It will only go up for people making 400K or more. They will see about a 2.6% increase in their top tier bracket. On payroll taxes, this is actually something that was up in the air. The last time I gave an update on this, there was a consideration to increase payroll taxes on everybody making more than $137,700. Well, that has now been pushed back to the previous idea of $400,000. So if you make under $400,000, you will not pay more in payroll taxes. That's good. For itemized deductions, you will only have limits to itemized deductions if you make $400,000 or more. Otherwise, no changes. Then the P's limitation, just another limitation on itemized deduction, will only go into effect if you make over 400K. Qualified income deduction will only phase out if you make over 400K. Great. Now, this is something that is also good for everyone because there was talk that Kamala Harris wanted all capital gains, like stock gains, to be taxed at your ordinary income tax rate. And usually when you have long-term capital gains, you only pay 15 to 20%. If you tax capital gains at an ordinary rate, which means you sold a stock for a profit or real estate for a profit, you might potentially be paying somewhere between 20 to 40% on those capital gains. So this, however, has been clarified by Biden that he is not going with the Kamala Harris version. Instead, he is going with his own version, which means he will only make any changes for capital gains to people making more than $1 million per year. And for those people, long-term capital gains and qualified dividends will be taxed at an ordinary income tax rate. Furthermore, now let's talk about changes that affect everyone. And I've broken this down into the good and bad. The bad for everyone is the elimination of the stepped-up tax basis. This is one of the great ways to basically build generational wealth. So, for example, you could buy real estate and own real estate. You could own a family home forever. Your parents could own a family home. Your parents could own stocks. And then, that day comes when they're no longer with us, they might be able to pass those assets on to us tax-free, or we might be able to pass our assets on to our children, basically tax-free. And that's by stepping up the basis. Now that part's complicated. Just basically think about it as the stepped up tax basis equals no tax when somebody passes away. It's kind of like extinguishing or eradicating all of the tax that's owed. Somebody could literally build a massive real estate empire and then they pass away and they pay zero taxes by gifting it to their children, basically. Up to, of course, the limitations of the estate tax, which for a married couple kick in somewhere around $20+ million. That's really the bad that affects everyone because it takes some of the benefits away for holding stocks and real estate long term. Not so good. However, there are some goods to offset this. Some more tax credits for people without children who are 65 or older. This should not say 5+, that should be 65 or older. Renewable energy related tax credits. This would actually be very good, I imagine, for Tesla. Child and dependent care tax credits. Basically, if you have one child, you could get tax credits up to $8,000. The way they would do this is they would reimburse you 35 to 50% of what you spent for child and dependent care. If you have multiple children, you max out at $16,000 with that same ratio. Another child tax credit, where you can get up to $3,000 for children 17 or younger, with an extra $600 for children under 6, so that'd be $3,600. Usually these tax credits have phase outs. So usually once you make more than, $125, $150, $200,000, you start seeing these phase outs, and I expect we would see that as well under Joe Biden, though that has not been clarified yet. A first-time homebuyer tax credit that would actually give you $15,000 to go buy a home, and you would be advanced that money at closing. So you don't have to wait for your tax return to get this money, because usually when you get a tax credit like this right here or this, you would wait to get that when you file your taxes. For businesses, we would see the corporate tax rate go from 21% to 28%. Some additional tax credits for manufacturing or for new markets credits, basically stimulating business and real estate in low income areas are what these are for. And also instituting a minimum tax on corporations. So corporations that have gross profits of over $100 million, but then show losses or don't end up paying a certain amount of minimum in tax, they would end up getting hit with this basically alternative minimum tax on corporations. Not mentioned in the Biden plan right now are the Kamala Harris plans to tax incomes over $100,000 for Medicare for all. That is not included in Biden's plan right now. The Lift the Middle Class Tax Act, these were credits for people making plus or minus $50,000. That is not in this. Financial transactions tax on stocks and dividends and options, not in this plan. Eliminating the 1031 exchange. This has been talked about by Biden, but it did not appear in the latest version of Joe Biden's tax plan. The Tax Foundation says the impact of all of this, because overall it does increase taxes on corporations and certain individuals, will be 517,880 fewer jobs over the next 10 years, a GDP reduction of 1.47%, wages, that is wage growth, the money we're making, down about 1.04%, and minus 2.54% of money available in the economy. And that's common when we see higher taxes. You see a little bit. So this isn't just to bag on Biden, this impact section here. That's just what the researchers think would happen in the economy. Generally, you see these numbers are positive when there are tax cuts and negative when there are new taxes. And that's because of an economic principle known as the deadweight loss. Okay, then Donald Trump, basically the only two big things that he's talked about when it comes to taxes are actually doing the opposite of Biden and lowering the corporate tax rate to 15%, but then potentially also having additional middle-class tax cuts. Well, there you go. There's your update on Biden versus Donald Trump. Make sure to get your 2 free stocks in the links down below. Get your life insurance. Hopefully this was helpful. If it was, consider sharing it. And folks, we'll see you in the next video.